Bitcoin isn't backed by gold, it's not backed by oil, it's not backed by government decree. So why do BlackRock, JP Morgan, and some governments around the world, including the US government, now treat it like a strategic asset? In this Orbital Explainer, we're diving into a debate that's followed Bitcoin since day one. Does Bitcoin actually have value? Let's start with the fundamentals. What gives something value? And then what is money? First up, value. Is it physical utility, like a tool or a commodity? Or is it something more abstract, like reputation, intellectual property, or a brand? Value isn't something embedded in an object. It's determined by factors like usefulness, scarcity, durability, and liquidity. But the arbiter of all these traits, and the ultimate decider of value, is the market itself. And what is a market? It's not just a price chart. It's a dynamic system, a collective of informed individuals, each making decisions based on their beliefs, analysis, needs, and expectations. If enough people agree something is valuable, it becomes so. Take housing. A modest two-bedroom flat in central London might sell for 10 times the price of a mansion in a rural village. The bricks are similar. The plumbing works. But the market, driven by location, demand, and perceived opportunity, assigns radically different values. The asset didn't change. The context did, and the market responded. And money? Money is a ledger, a system for translating labor, time, and trust into something storable, transferable, and tradable. But for that ledger to function, it needs a medium of exchange, something widely accepted in trade. A medium of exchange allows people to swap goods and services without direct barter. Currency is the physical or digital representation of money, designed to be portable, divisible, and stable enough to facilitate trade. So, onto Bitcoin. It isn't just a coin, it's a new kind of ledger. At its core lies the blockchain, a decentralized database that records transactions in a transparent, tamper-proof sequence. This ledger is secured by proof of work, where miners compete to solve complex mathematical problems. That process converts electricity into security, making the network expensive to attack and simple to verify. Once a block is added, it's broadcast across a global network of nodes. Each node holds a full copy of the ledger and independently verifies the new block. Consensus isn't dictated, it's earned. And because Bitcoin is peer-to-peer, there are no middlemen. No banks, no payment processors, just individuals transacting directly, with the network itself acting as the final arbiter of truth. It's the first monetary system where trust is replaced by computation and consensus is enforced by code. So why do people, the market that is, say it has value? Let's analyze its properties. 1. Its scarcity. There will only ever be 21 million bitcoins. This engineered scarcity mimics gold, but with mathematical precision. No dilution, just a hard cap encoded in the protocol. A hedge against inflation and every diluted fiat currency. 2. Security. Bitcoin's proof-of-work mechanism secures the network with immense computational power. It's the most secure ledger and computer network on Earth, resistant to fraud, manipulation, and seizure. Attacking it would require more energy than most nations can produce. 3. Decentralization and peer-to-peer architecture. Bitcoin has no central authority and no single point of failure. Every node verifies the ledger independently, removing the need for banks or intermediaries. Unlike currencies controlled by institutions, Bitcoin gives you direct control over your wealth, just you and your keys. 4. Divisibility. Each Bitcoin can be split into 100 million satoshis, or sats. This allows for microtransactions, fractional ownership, and pricing flexibility, even if Bitcoin trades at millions per coin. 5. Portability and borderlessness. Bitcoin is digital, portable, and borderless. You can send it across the globe in minutes. No customs, no banking hours, no permission required. It's money that moves at the speed of the internet and the blockchain. 6. Monetized electricity. Bitcoin converts energy into monetary integrity. Just as labor becomes salary, energy becomes Bitcoin. Proof of work turns electricity into security, anchoring the ledger in physical reality. 7. Durability. Bitcoin isn't subject to physical decay. It doesn't rust, rot, or degrade. As long as the internet exists, the ledger persists. And unlike fiat, it can't be printed into oblivion. 8. Transparency. Bitcoin is open source. Every wallet, every transaction, every block is visible to the network. Anyone can audit the code or the ledger in real time. It's financial transparency at protocol level. 9. Liquidity. Bitcoin is one of the most liquid assets on Earth. It trades 24/7 across thousands of platforms with deep global markets. You can convert it into fiat, stablecoins, or other assets instantly anywhere in the world. So if there is a market attributing value to some or all of these things, you have your price, your value. Because of its properties, Bitcoin is increasingly seen as digital gold, a hedge against inflation and currency debasement. Its scarcity, durability, and decentralization make it a long-term store of value in volatile economic conditions. And the case against Bitcoin having any value? Critics like Peter Schiff often cite the following arguments. 1. Environmental impact. Bitcoin mining consumes vast amounts of electricity. Critics argue this energy use is wasteful and environmentally damaging, especially when sourced from fossil fuels. 2. Volatility. Bitcoin's price swings are extreme. It can lose 50% of its value in months. Critics say this makes it unreliable as a store of value or medium of exchange. 3. Lack of intrinsic value. Bitcoin has no industrial use, no physical backing, and no yield. Skeptics argue it's nothing but code, purely speculative, driven by hype rather than fundamentals. 4. Regulatory risk. Governments can ban or restrict Bitcoin. Critics warn that future regulation could limit its use, suppress its price, or criminalize its ownership. 5. Competition from other cryptos. There are thousands of coins, tokens, and blockchains. Critics argue Bitcoin can be diluted by endless alternatives, making it hard to justify its dominance. 6. No central governance. Bitcoin's decentralized nature means no one can fix bugs, reverse fraud, or adapt quickly to changing needs. Critics see this as a weakness, not a strength. 7. Security concerns. While the network is secure, users can lose funds through hacks, scams, or lost keys. Critics argue that personal custody is risky and impractical for most people. 8. Limited scalability. Bitcoin's base layer processes only a handful of transactions per second. Critics say this limits its potential as a global payment system. 9. Questionable use cases. Bitcoin is often used for speculation, not everyday transactions. Critics argue it hasn't proven itself as a practical currency or payment method. Also, they say that Bitcoin has been used for nefarious activity, money laundering, criminal activity, ransomware, darknet markets, and capital flight. 10. Gold as a superior hedge. Peter Schiff and others argue that gold has thousands of years of history, industrial use, and physical presence. They see it as a more reliable store of value. In truth, the idea of intrinsic value is a myth. Gold's industrial use is marginal. Fiat is backed by coercion. Bitcoin is backed by math, energy, and belief. It's code, but so is fiat, so is your bank balance. If the market agrees that code can be valuable and that code can store value securely, then it does. Bitcoin isn't backed by nothing. It's backed by the most secure ledger ever built, by computation, by decentralization, by consensus. It has no physical form, but it coordinates billions in value across borders. Yes, Bitcoin consumes energy. But much of it comes from stranded, wasted, or renewable sources, flared gas, excess hydro, and off-grid renewables. And yes, it's been used for illicit activity, but so has cash, gold, and the global banking system, at scales that dwarf anything seen on-chain. Unlike fiat, Bitcoin's ledger is public, traceable, and auditable. Bitcoin isn't necessarily the most advanced technology. It has limitations. It may face quantum threats in the future. Bitcoin adapts. Evolution is part of the protocol. But markets don't reward perfection. They reward trust, familiarity, and first-mover advantage. Bitcoin is the Schelling point, the default when no coordination exists. Is Bitcoin money, currency, or commodity? It behaves like all three. Traded like a commodity, used like a currency, stored like money. Its category is fluid because its function is emergent. Bitcoin is valuable because it's a secure, decentralized ledger. It converts energy into monetary integrity. It's becoming greener through market incentives. It's the most trusted digital asset in a sea of imitators. There is no higher truth, absolute form of value. Not gold, not fiat, not Bitcoin. Institutions once dismissed it. Now they're building around it. And most importantly, value is not a truth, it's a vote. And the market is voting for Bitcoin. This has been an Orbital Explainer from Orbital Strategy. Curated for clarity, built for thinkers. Subscribe for more episodes decoding the systems shaping our future, from macro to crypto, biotech to AI. Orbital Strategy. Signal over noise.